This passive income machine reported third quarter earnings. So let's look at the figures for those of you who are looking for a stock that could generate healthy dividend payments for the long term. For Verizon, inflation and promotions pressured their profits. Overall revenue increased by 4% to 34.2 billion in Q3. Postpaid phone subscriber additions totaled 8,000 and broadband subscriber additions totaled 377,000. The broadband high-speed internet additions were comparable to AT&T's additions of a similar number in the several hundred thousands, but the postpaid subscriber additions severely lagged behind its main rival AT&T, who added several hundred thousand postpaid subscribers. So there's something going on there where AT&T's promotions maybe captured more of the market share, and Verizon was late to react and adding to promotional activity to try and sustain their subscriber growth. Adjusted earnings per share of $1.32 were down from $1.42 in the same quarter last year. Management highlighted higher promotional activity in the quarter. You could think of these like, trade in your iPhone 10 and get the iPhone 14 for $100 or whatever that promotion might be to try and encourage customers to come into Verizon, bring their old phone perhaps and upgrade to a newer phone, and using that phone upgrade cycle to get a customer into Verizon, right? Because this customer may be an AT&T customer or a T-Mobile customer, but has an older phone, and Verizon is trying to capture that customer by offering a easier way for them to upgrade to a more expensive, newer phone. So these kinds of promotional activities hurt Verizon's profits in the third quarter. However, management did say it's now implementing a cost savings program to reduce expenses between 2 billion and 3 billion annually by 2025. This is a several years long project, so investors are going to have to wait and see how this evolves, but the company should provide quarterly updates as to the progress into this goal of reducing expenses between 2 and 3 billion. The company reported free cash flow of 12.4 billion year to date so far in 2022, and that's important because if you're a dividend investor, if you're looking for passive income from Verizon stock, then the free cash flow is a critical metric because the company pays the dividends out of free cash flow. It's one of the only sustainable sources of dividend payments. If the company is paying a dividend in excess of the free cash flow that it's generating, those dividends are coming out of their savings or their balance sheet. Or if they don't have the money to pay that in their balance sheet, in their bank accounts, then they're going to go out and borrow in order to pay that dividend. And as you might imagine, that's not sustainable. Eventually, they're going to run out of their savings. They're going to run out of their capacity to borrow, and they're going to have to tell investors, hey, look, I'm sorry, we just can't continue paying this dividend. We got to drop it down a bit. And so that's what investors do not want to see. And for that reason, it's important to keep track of Verizon's earnings and free cash flow if you're a dividend investor, because this is the source of your dividend payments. So long as these two metrics are high and rising for Verizon, you can feel secure in your dividend payment, right? And so talking about the dividend, Verizon mentioned that it increased the dividend for the 16th consecutive year. It's the longest streak in U.S. telecom industry, and this goes to their speaking to dividend stock investors, encouraging them to stay with the stock because of the dividend. And I believe the dividend yield for Verizon is approaching 8%. So a very healthy dividend yield. That's almost twice the income you can get compared to investing in a government bond, which if you're looking at the 10-year government bond is giving you about 4.25% interest. Verizon stock is giving you almost 8% yield on your money. So, an attractive stock for dividend investors. And in fact, Verizon stock is a buy recommendation from me. If you haven't seen my video on why I recommend Verizon stock as a buy, I will link to it at the end of this video. So I will see you over there. I recommend you go watch that video right now, and I'll see you there. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 354% as of September 21, 2022, and measured against the S&P 500 returns of 112% as of September 21, 2022.